Trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, I want to show you something that Rich Anderson sent to me yesterday. Yesterday's high in the stock market, we made new highs in NVIDIA, Apple, and Microsoft, all broke out into new high grounds. But of the 500 S&P stocks, folks, there were only 104 advancing issues and 398 declining issues. That is quite amazing if you want to think about it that way, because that was 80% of the stocks were declining when the market was up. Now we're down today. One day doesn't mean anything, but the fact that that was an all-time record on a high day may or may not mean something. That I don't know. Now, I received a couple of charts that I think you're going to be interested in, so I'm going to show them to you right now. This one's from our good friend Jim Bartolioni. In fact, all three of them are from Jim. This is from Teresa West. This is the monthly chart of the NASDAQ. As you can see, the ABCD pattern that we're looking at here, there was your 382 retracement there in April, and the high, we were expecting it to be right around 26,437. Last night, we hit 26,399. We backed off about 500 points, which isn't very much, but the fact that it did hit that should have some indication that maybe we should be a little bit cautious on the buy side, given the fact that the breadth of the market is as bad as it's been ever. That's not a good sign, folks. That means there's more stocks declining than increasing, and that's not a good sign. Okay, now let's take a look at a couple other charts we got from Jim Bartolioni. And Jim has been with me for 28 years now, I guess. Yeah, well, that's what it was. Hold on a second. Let me get this up here, and we'll be able to see it right here. Is where we are. Hold on. This is his chart of the Dow Jones going back to 1896, folks. That's 20 years after the Civil War. Shows you all these patterns, and it measures to 47,270 calendar days. And look where we are. Look at the price. The price and time are equal. Look at that. 4127. This is just an amazing thing. I think that ought to win some kind of a prize. But that's a very, very interesting one. And you can see there was our 382 retracement there in April. And we're just in an area where we're going to have some real exciting things happening. And whether they're going to continue this way or not, I don't know. But these markets today, like, you had two stocks today that were going crazy. Caterpillar was going nuts. And so were a whole bunch of other people and looking at it. But that's what we're watching here today. Now, the next one I want to show you here is from Jim. And this one, hold on one second. We'll get this one right here. I think this is the one I want to show you. Nope, that's the Dow Jones. I want to show you the New York's monthly chart. Now, this is the monthly going back from 1966, okay? Remember, the Dow Jones did not get above 1,000 until 1972 or 73. And then in 73, it made a high and then went down straight into 1974, gave back 50%. That's where I learned how to read the Gartley book. And so this is what's happened. You can see there's our prices here. The expansion measures up to this level. And we're just in an area where we got to be really careful up here, folks. So that's why we're watching. You can see the number here is 21,847, and that's what we hit yesterday. So that's another one that is extremely interesting. And Jim does a great deal of mathematical work, being the old pilot that he is, the old Top Gun dog. Anyway, let's move over here and talk about a few others. So we talked about this head and shoulders pattern that we're looking at right here. Now we want to take a look for just a second here in the crude oil, because folks, we've been talking about crude oil almost every day because of the patterns that we've been watching. Now you'll move this over and I want you to see from the low that we made right back here. It came in at 0.44, which is really close to the exact 382. There was made a lower low here by just a hair, folks, just a little bit. Now, what we had Mike Moore on last week, and he talked about the possibility of watching heating oil because of the fact that it is a precursor of what's going to be happening in the market. So what I did was I took his advice and I went over and I pulled up crude oil, and I wanted to show you what I saw in crude oil. We're going to look at it together. There's crude oil. There was the bottom here in early October. There's our low today. You see that low right here? Look at this low right here. Guess what that is today? That was yesterday. Now, what do you want to think that is going to be? There's your low, there's your high, and there's your 382. Right on the money. This is you got to pay attention. Well, you don't have to, but it's a good thing to do. I'm writing it. I'm adding something to a book for a good friend of mine, Richard Rube, and he's going to be publishing a book pretty soon about his travels through. He ran the Southern California Day Traders Association for many years, and he asked me to put a little segment in, and I'm going to put in about 150 pages about the 382 and how to use it. I've got some rules here that I think are going to be. And you know what? I'm not even worried about whether people believe it or not, because these things happen so much that you just can't. It's so natural that you can't believe it. Look right here, folks. This is heating oil. This is over a 5-day period. See that little quick move there? Now, if you're waiting for that and you're watching for a 382 retracement, there's your game plan right there. There's your 382 right there. And look, away she goes. And we've seen this in just so many things. So that's why we're watching these things so very, very closely and trying to line them up to give us some better ideas. But the volatility here is going to be increasing more and more each day, and we want to be able to watch that. Just today, just to give you a quick example here, I wanted to show you the Dow Jones, because I was watching the Dow Jones here early this morning because it was run up by Caterpillar. I mean, here the rest of the we got the NASDAQ is collapsing, and this went straight up. That was because it was Caterpillar. Caterpillar's the number 2 expensive stock now. It's past Microsoft. I mean, it's what, 570? It's almost ready. Well, it can't pass Goldman, but there it is. Then this is what we had, and look what we had here, right here. See that little tiny little beep right there? If you're watching for it, you want to place an easy place for look at something. There's your 382 right there, and already it's down, $500 Dow points right here. What we're watching, okay? So those are some of the things that we're paying attention to, and we hope will get you moving in the right direction. And let's get over here and talk to a little bit about. Let's do the euro next. We've got so many things to talk about. I don't know which one to do next. Okay, here is the euro last night. Of course, we had the report yesterday. This was the report. The market broke really big, and then it rallied up last night, right up to the exact 618, right on schedule. There it is, right there. There's your 618, and then you came down, and now you're moving lower and lower. Remember, folks, this is the one that we think has really big potential. I keep putting this up, but that's the only way I can remind us, is that this is a monthly chart, and I believe we're going to be coming down in way below par. See, way below par will just get you right below the 382, and that's a huge amount here. See there? Well, no, this par is par is way down here. Wow, that would be a ball buster if that one's really good. I mean.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, I'd like for you to help me out here a little bit. This is Meta, and they came out with a bond offering today, $125 billion, and it was oversubscribed. What I don't understand is, why would a company with this much money have to borrow something? I don't understand that. It reminds me of one of my favorite stories going back to 1965. Lyndon Johnson had been president for just about a year and a half, and Rolex came out with a watch in his honor called the Rolex President's Watch. It's quite famous because it's all gold band and everything. That watch was $2,500 brand new, folks. You could have bought a new car for that. Unfortunately for me, I had made some money in silver, and I was a fan of Lyndon Johnson because of his humor. And so I liked the watch, and so I splurged, and I did buy it, and I still have it, but it's just the memory. Well, it's worth more than I paid for it. However, what I did want to mention is my favorite quote from Lyndon Johnson was, he says, whenever anybody comes up to me and said, I'm just an old country cowboy, he said, first thing I do is grab my wallet and cover it up. And that's what you got to do. Why are they borrowing this much money if it's such a good deal? Well, I'll tell you what, if you'd just used ABCD today, you would have been able to see that you could have made some money, because there's your A leg, there's your B leg, there's your CD leg, and it's 58. So you'd have made $20 already. I don't know why, folks, but I'm just a little curious about this, a little suspect, I guess, in my old age. Okay, so we'll get this out of the way here. Here's NVIDIA. It's done nothing. Look, it's still way up in the air. Folks, some of these stocks, it's a market of stocks. So just because one stock, we've seen this over and over again where one stock goes crazy. The one that's been going nuts today is Caterpillar. Now, how can that be with the farmers being in such dire straits until they start selling soybeans to the Chinese, I guess, and they're supposed to be buying it. We'll cover that in just a second. But here is Caterpillar. And you can see Caterpillar. It had just a tiny bit of a gap up. There's your Dow Jones. Why the Dow Jones was up. Look, this is 80 points of the second highest stock in the group. I mean, this is huge. That's why the Dow went up. It was up 400 points. I think I just checked. It's up 120 now, because just backing off this little bit will do it, because the other one's back off. It's the same thing. Looking at this on the long-term weekly, look at this. There was the ABCD. Look where it's done here. See, there's another stock that goes crazy. You can't stand in front of it. Well, you can, but it's not very smart. Anyway, we'll get that out of the way here. Get this out of the way. We want to take a look at Apple's earnings are coming out today. I saw that it was up earlier. Let's just take a quick look here. See, we are with Mr. Appel. This will be a big deal. May or may not mean anything because sometimes you get good earnings and things don't do the way they want. So here's Apple, and it's up on the day. We've making new highs again. There it is right now. We do have earnings out today. So let's just play the earnings game and the old ABCD here together and put a couple bucks on this just for the heck of it. All right. This is what I like to do anyway. So let's just do it. There's your A leg right there. There's your B leg right there. There's your CD leg right there. Oh, that comes in at 76. We might not get there because we got to 74.5. So we're right in here. Well, we got about an hour and a half to go. All right. So what I'm going to do is I'm going to buy a put. Theoretically, folks, I don't trade puts and calls or stocks. I'm going to do that. Let you do it, okay? You got your puts and calls in here, so I'm going to buy a put with a strike price of 266. Let's say 268, 265. Okay, 265. So I'm going to buy a put. It's got to get below that to make any money. It's not going to cost me very much because it's way out of the money. So that's what I'd be looking to do. All right. You could sell the stock. Stop would have to be above here. You might get killed, but again, it might be okay. Who knows? Anyway, that's what I'll be looking at here with Apple, just for kicks and giggles as we look at these things unfolding here today. All right, now we'll get back up here. I want to cover a couple of other little things that we're watching here. We did the NASDAQ. Okay, to stop and pee. Let's get up here and take a look at this here. I've done all these last night because we completed just about every conceivable pattern that we could get here. We'll get the long-term pattern here in just a second, folks. Get this hourly chart so we can see it. Hit some major stuff. And I don't even know if this is a top or not, folks. Honest to God, I've been picking them for so long, I don't even know which. See, we're supposed to go to 22, and we got up to 40. We went 20 points higher, and we've done nothing today, folks. There was, we did something. You see that low right there? We took out the Sunday night low. That in itself should be a little scary if you're long, because it shouldn't have done that. You see that? It did take that out. That's our first indication. Below this, folks, this is Thursday. If we close right here, here's where you want to close. You want to close right there around 686. I don't want you to fill that gap because I want you to come in Sunday night and gap below that. And that will leave a 1 week island reversal. Let's get this up here. You see that right there? Dun, 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 dun. As long as it doesn't close below, you want it to close below 6,850, another 50 points. Just close right in. If it closes lower and hasn't finished this gap, go to your bookie and says, give me $4 on the fifth race at Hialeah, because this would be a absolute mortal lock, in my opinion. That would be, look, you got a hanging man right there right now on the weekly chart. See that? That's called a hand. That's one of the most bearish of all candlestick patterns. Wish I had time for that. I would look at it. See, it means it highs and closes on this low. You see, here's an island reversal here, but you see how it closes in the middle of the range? It's got to close right on its low. Oh, boy, that's a really rare one. I just saw that. Boy, that's going to be an interesting one to look at. Shut the front door. So the key level here, let's just look at it. But we closed last Friday. Let's write this in. This is historic, folks. We closed at 68.38. 68.38. Okay, so that's the key. All right. This is just like what I like to do when I play poker. If we close above 68.38, somewhere in this zone right here, tomorrow, we're going to do this tomorrow because I just saw this just now. We missed, and if it does that, that's going to, but because if it opens higher on Monday, it's wrong and you get out. But if it opens lower, forget it. It's going to be you're going to have a heck of a one. It's going to be this weekly. It's not a daily, it's a weekly. That's why it's so very important. Now, if you look at the NASDAQ did a couple things here last night. Hold on a second. It just had a big rally. Somebody must have done something here. There's where we were right now. Hold on, just to show you what we're doing. There was the high last night in the NASDAQ. I showed you that on the monthly chart. There it was right there. Now, see, there's no monthly gap here, but you look at the weekly, There's a weekly gap. You see that weekly gap right there? See the 1.618 measures up to 26,000, whatever, right here. But the gap here is, wow, that have to drop another 500 points on Friday to even get down. That's not going to meet it. This would have to drop 500 points on tomorrow to get down there, because this is much stronger. Whereas the S&P, which is a better index because it's 500 stocks as opposed to, well, actually about 25 or 30 stocks, and this one gives you a better set. Well, it might not even happen, but it's worth the price of admission to watch, because that's where you buy your lottery tickets, folks. That's the ones that you'd really like to see, really help you out if they're going to turn that way. So anyway, that's what we're watching here in the NASDAQ. Sorry to get a little excited, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we'll look at a couple stocks here, Tesla and Broadcom, and then we'll get into some of the things that I have a tiny bit of experience with as the commodities. You can see we had the ABCD pattern right here. There's ABCD right there. In Tesla, it's backed off, gapped down a little bit today, really big in the big trading range, not doing very much. Broadcom made new highs, folks, today. And see, we took out the highs of September, went up to the 1.27. We're down a little bit from the high, down about $15 from the high, but still quite strong. So that's another one that we're paying close attention to here. Okay, so let's get this out of the way here. And then what I want to do is go over and talk about some commodities and what's been going on. First of all, we're going to take a look at the soybean meal. Remember, that was one of our all-time favorites. Well, you know what I have. My all-time favorites are the ones that usually are the toughest. But this is the, get the daily up so we can see it easy enough, because it's down there at that 272, nobody wanted it. And now you can see where it is right now with the Chinese are going to be buying a whole bunch of beans. And you can see this has had a huge move. Unfortunately, folks, we got out of it right here 3 days ago. And I had a choice of either using a trailing stop, but they came out with the buying, and boy, that pushed it up quite a bit. So I know some people did have a trailing stop. We had a gap up that day. That was probably the day to buy it, which was 2 days ago. And then, of course, when the news came out yesterday and today, that's what's happening, and had a pretty big run. We were also in the wheat, but not many people bought they're not buying much wheat as of yet. But let's take a look at where the wheat is. It made a nice profit, but nothing like with the other. You can see all we've had today in wheat is a match a similar high. We backed off a little bit. We bought the wheat here. No complaints, folks. That made $1,500. We were risking $5. There's nothing wrong with that. The meal was the big one because, I mentioned in that meal contract that it hadn't been that low. Let's get up here and take a look at this on the weekly. It hadn't been this low for years. I mean, you have to go back to 2020 for the seed meal. Look where it is right now. Heck, it's almost made oh my God, look, it's made a 382 on the, it's making a 382 on the yearly chart in how many, 2 weeks. Look at that. There was a gap up this week. See, there's the key. So anyway, that's neither here nor there. You have to move on, do the next trade. That's all you can do. There's no question about which one you're going to try. You just try to do them all, okay? My big question that I have today, and I'm going to bring that to your attention, is why do they have to borrow all this money at Meta if it's so good? Why don't they finance it themselves? And why does Justin Jordan, what's his name, Mr. Wong, do the same thing? I know it's going to cost billions and billions and billions of dollars, but it's been really good when they had it themselves at $70 a share. And now the stock is $212, $10 a share, and they're borrowing lots of money. I don't understand it, but like I said, I'm going to hold on to my wallet and wait and see, what happens with that. Oh, by the way, when I went to work for Lilly, I had the watch. I started in '65. I bought it before I went to work for Eli Lilly. I thought it was a big deal. But here's a young guy. I'm 23 years old, and they said, why are you wearing a watch like that? And I said, well, I got it as a gift, and it was a gift to myself, of course. But anyway, it caused a lot of problems over the years. I didn't wear it. I kept it in a safety deposit box for a while. And I started wearing it when I went to work at Drexel because everybody had one. Then on the floor, everybody had one, even the girls. So that was back when it cost a lot of money to have one of them. All right, let's take a look at one other stock, and then we'll go right on to that. And that is, move it over here. We'll find it. Where is it? JP Morgan. It made new highs today. The market was up mainly because of those stocks. There's JP Morgan, should be right there. And I believe it gapped up today, too. No, it didn't. By golly, someone gave me some information. It was up strong. You can see it's up quite a bit. It's another reason why the Dow was so strong. But I thought it gapped up, but it did not. That was my mistake. Okay, let's move over and take a look at the soybean oil, because remember, we were very, very bullish on soybean oil to get down to that. We're not going to get there now. Well, you know what? Here, even with that news, soybean oil is not doing it. It's actually down on the day. So we get down to this area here. You've got to pay attention. Well, you don't have to, but you should really watch this because it's a long-term pattern here. It's only 2 cents away. So a little, let's just get this out of the way. You'll see what I'm talking about. we got a chance, because this is soybean oil, folks. And believe me, they use soybean oil by the tons over there in China because they cook a lot of rice, and that's what you want to be watching. Down in this area right here, down about another 2 or 3 cents, you got to pay close attention to it. Excuse me. Sorry, I got a little frog in my throat. Okay, move that out of the way. We've covered that one. Now let's get back to the currency. Remember a couple days ago, we were talking about about 6 or 7 days ago, we were talking about the pattern in the Canadian dollar, that it looked pretty bad. So we're going to take a look at it, and you can see it made the first objective yesterday and today, had the same one. There it is right there at the 382, stopped right on the money. We brought that to your attention, so that was a profit objective, and it certainly we rallied back. I think this is a weekly chart too, isn't it? Yeah, it's a daily. So just in one day, it rallied back to the 61%. So that's a really important number in that one. And of course, I've already talked about the euro. We covered that. Let's look at the British pound. That's been the weakest, well, not one of the weaker sisters, but one of the ones that's a little weaker than the others. And when I trade the currencies, folks, I only trade the one that is the weakest or the strongest and has the best pattern. This one here, now you can see, we got a pretty good buying one right here. I want to refresh maximum here on the British pound, because we hit some pretty major support here in the British pound today, folks. We've got to watch this, because there was your retracement back to 50%. We did the euro. We didn't do the pound, but because I didn't want to double, if you're going to do the double contracts, in other words, if you're going to do short the pound and the euro, why don't you just sell 2 of the weakest, which would have been the euro? That's smarter in my opinion, but that's the way it goes. Anyway, you can see the ABCDs. Let's just draw these in right now, because we should have made a bottom today in the old pound dolly. There it is right there. There was the bottom right there. We got another one coming in right behind it right here. Whoopsie daisy. Let's get this out of the way. And I'll be buying this before the close today. There it is right there. And we come down because of the strength of the down move. We got to expand that by 1.27. And that's going to take, this is all going to be covered in the chapter of the book I'm going to be doing for Richard. And there it is right there. There's your double action right there. And then all you have to do is apply a little bit of imagination. Drive 1, drive 2, drive 3. Buy the pound. Put a stop below there. There's your stop. It's got to be right below 130, right below 131. Put your stop right below 131, because there's the 1.618 expansion. That whole difference is not very much, but I'd frankly be looking to buy the pound. We've taken out this low. We didn't collapse. We took it out lower low. We made a little bit lower low today, and you had another ABCD right here. Let's just double check, because that looks like it was a 382 retracement, and we'll see. There it is right there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Go, folks. Someone, a little bird came and said, hey, let's look at it on the weekly. There's the British pound on the weekly, making a 382, going back to the high that made in June. That's very important. When you look at this on the daily that we just did, you've got a 3 drive to a bottom. If it goes below 131, you don't want to do it. But by golly, that looks like a pretty good one to me. So what we should do is let's take a quick look here at the dollar index. The pound is about the third one in that group. There's first the euro, then the Japanese yen, and then the pound. So we'll look at the next we'll look at the Japanese yen. Let's do the dollar index. Come on, I don't trade it, but everybody follows it. So here it is right here. Might as well get this up here on the long-term daily. Should be screaming to the upside. Oh, there it is right there. So here's where we are with the dollar index. Let me update this a little bit here to make sure I haven't missed very much. Okay, there's where we are. Get rid of this out of the way. We don't have to worry about that right now because it's been going up. So here's where we are. Well, we're at a real critical level 2 here, folks, because you've got an ABCD pattern completing right here. You've got another ABCD pattern. I'm going to have to look at the euro when we're done with this because I'm short the euro and I don't want to get, oh boy, you've got to be careful here. Yeah, I'm going to have to cover the short euro position just because of this. There's you're going to have a little bit of a butterfly right in here. There it is right there. Okay, those of you that are in the euro, stay tuned, folks, because I think I've been doing so doggone much. I think I've missed a couple things. Let's just get this up here and do it right now. Come up here. Of course, I get into trouble doing this too, but trouble's my middle name. Hold on just a second right here. There's the euro, what I want to see. Okay, now we just bring this up. Here's where we are right now. And it's come down. It's not made a new. Let's refresh. First, we're going to refresh this and get rid of all the stuff that's on here. And we're going to look at it real close. We're making a little different than the other one. See, it hasn't made a new low as of yet, but I got to stick with this right here. I think we're going to still hit a little bit lower because that monthly chart is so bearish. All we have to do is to take this out, and then we're looking at a lot more patterns to the downside. So I've got to give it a little. The one that's in question then would be the pound, because we're very close to that level in pounds. So if you're going to do the pound trade, you're going to have to put your stop below that 131.50. That's a 50, not very many pips away. So you got to be out of it. It goes below that because that means it's going to accelerate like heck to the downside because it's going to be breaking this 1.618 and the 382. So your risk is very small in here, but it's still a risk. So you got to remember that. But I'm in the euro, so I'm playing the euro for something a little bit bigger, lowering my stop down. That makes sure to lock in something. But that's what we're trying to look at as we're watching these things here unfold here today. Someone just had pop me a question about Meta and the fact that these guys, they like to trade with other people's money. And if that's the case, I think, now look, after the market, look at this strong trend here. Let's see if the 382 would have helped you at all. Okay, there's oh, no, it didn't, because there's your first move up. Okay, then the market has nothing here, but there's no 382 in here at all that I can see. No, nothing at all. In fact, is the last little burp here. Did it make it? No, it didn't even come to do that. It's just a short covering rally, but we're way above the open now, which is a good sign for that ABCD that completed there. That certainly went right to where it should have, and then it's been rallying. So that's what we're watching. So we do one thing at a time and find out whether they're going to work or not. Trouble is, they don't all work, and that's why they work, is because they don't all work. If they all worked, everybody would see this stuff, and that's not an easy thing to do when you're watching these things unfold here. We've got a movement here in this gold, folks. We've got to be careful here because we've had a pretty good run here. Let's get that hourly chart up, because you can see that we had a double bottom down here yesterday, right on the money, just about right there. Where is it? Right here. Get this over right there. There it is. Right there is what I was looking at right there. The double bottom that we had right there this morning. There was yesterday's move. There was today's bottom. See, we just didn't quite make the double bottom, and then we had to move up, and it's acting pretty good, because there was your first ABCD, and it broke what, $80? Swinging big time, folks. But it should. It's a $4,000 handle, for God's sake. That's not much. It's 2%. So there's where we are. Now we've got a setup that we're heading higher, no question. Two of them here. One is right here. That's going to be taking us up to right about there, which is the 618 of that bigger move right back here. Okay, 4074. And we have another one coming in right here. And that's going to take us, look, about the same place. That looks like where it's going, folks, right up here. We're going to take out these highs. That's going to tell us, because if it screams above that, then gold has made a pretty good bottom in here. And as I mentioned on the weekly chart, it's not this god darn thing. Sorry about that. I don't know what's wrong with that. I got to get it fixed, but how, I don't know. There, I can see it here. That was a 382 off of this low right here, folks. Remember, this was an ABCD, so that's a major bottom, okay? And it was 382. That's a sign that that could have been a good bottom. I pointed that out right there at that 39.10. And so far, it's up $110 from that level, okay? So what we're waiting for is to see what that next 382 is going to be, and that takes us up to the magical level of, going back to the 4-hour, and just spreading it out just a little bit. There's our high way back here, so we'll just clean all of this out, and we'll see where we are. We go from our high right here down to our low right there, and look what we got here. We got an A, a B, a C, and a D. So it's going to be right around 40.90, up about another $70. That's going to tell you whether that's going to be the next leg down in gold, or are we getting ready to move a bit higher. So that's what we're watching right now. I assume that this should be a pretty good high and then down, but there's always a possibility that it could be screaming to the upside, especially with the news out these days. Things change in the matter of a blink of an eye or less, and that tells you that you just extremely, extremely careful as you're watching these things unfold. We need to look at silver also, because it's been acting a little more bullish than the gold. If silver ever closes above $55, folks, it'll go to $100 an ounce. It's my opinion. And I like silver coins. I like silver dollars. They're rare ones. Hold on just a second to get the silver up here so we can see. Here's silver. We should be screaming in that today, too. We are pretty good. Silver's already made to 382. Look at this. I believe so. Let's just double check. Okay, I'm pretty sure we did. We've made to 382 already. There it is today. It's already made a 38% retracement. Take 2 days to get there. That's a good sign from the silver folks, because remember, gold is way far away. It's $100 an ounce away from that, and here it is right there. That means that the 382, we've probably had some really nice, here's that movement here for the last couple days here. There was our low, came right back here on Tuesday, and look at this, this has been going up pretty good, folks. I mean, look at this. Just in a couple days here, we rallied $3. That's $15,000 in silver in just a really short period of time. There's your big pullback right here, came to the 50% level, and now we're heading higher. This is already above the 382 in 3 days, folks. That's something that's not bearish. See, you want to pay attention.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the most important chart from my perspective, just by going over them. I didn't see this until just now. This is the weekly. Now, the reason why it's important is yesterday we had the worst day of breadth in the history of the stock market. The worst day of breadth. In other words, there were more declining issues than there were advancing issues, except the market was positive. And that's because there were some stocks that were very expensive that were up, the others were not. Now, if we close below 68.38 and don't fill this gap on Friday. Now, if we fill the gap, that won't mean anything. But if we just close right in here somewhere, another little bit of a down, that's 60 handles. So it doesn't take long to cover that. So as long as we close above 68.38 in the lower part of the range, that is a weekly island reversal on a Japanese candlestick. That is one of the most bearish patterns that you can have. The only one that's more bearish is the one they call the 2 black crows. And that way you have a double. In other words, this would double up and have 2 of them sitting there. That's known as 2 black crows, and that one almost never fails, because when it gaps down, down she goes. So 2 things happen. Biggest, the fact is, a down day, the worst breadth ever in the market, and making a top on that time frame, come on, you got to pay attention to that. But right now, it doesn't mean anything. This is what counts. Tomorrow, when we look at this, we're going to be watching it because 68.38 is the number. You'd like to see it close at around 68. See, the old high here was right here, was 68.41. So you don't want it to get to 68.31. It's got to, let's change that. It's got to be 68.40. Let's do that or better. It's 68.42 has got to be the number. Hold on 1 second. I got to put that in there. Yeah, let's make that wrong. 68. The old high was 68.42, so we have to be 68. You want to close it at 68.43. 43. 68.43 or higher on Friday in the low end of the range. That's what you'd like to see. And then you watch to see what happens on Monday. See you on the flip side tomorrow, folks. May God bless.